Hello students, Assalamu alaikum. Today we are going to discuss the second part of our AS level paper of June 2023. So here is your paper. Okay. Last time we did question number 1 and 2 and today we are going to discuss question number 3. Acha, in this question I must tell you one thing. This is a question about single entry. There are two types of single entry. Accounting for incomplete record is usually called as single entry also. And um, there are two types of single entries. One is called pure single entry and the second is called mixed single entry. This is a question of pure single entry. In pure single entry, you have to calculate the profit by using capital at end and capital at start. Okay. And how to identify that this is a question of pure single entry? You do not have, they will not give you in the question cash book or bank account as a part of question. Okay. You will be given only assets, liabilities, and capital at the start and at the end. Okay. And you have to calculate. Now, uh, so Khalid opened his business on 1st January 2021 with a capital of $41,000. So this is the capital of a start. He did not maintain a complete set of accounting records. Okay. Now Khalid wishes to know his profit and loss for the year ended 31st December 2021. He has provided the following information. Now these are the assets and liabilities given at the end of 2021. Starting capital is 41,000. Ending capital we have to calculate by using these assets and liabilities figure. Okay. Now, non-current assets include a motor vehicle. This vehicle has been privately owned by Khalid, but during 2021 it was transferred to the business at a valuation of $9,000. So, this is the additional investment of the owner. Khalid drawings are given $14,870. Okay. Calculate the business profit or loss for the year ended 31st December 2021. So, first, what we have to do, we have to calculate capital at end. Okay. So, how to calculate capital at end? So, capital at end. See, what are the assets available? Okay. Inventory. Inventory is given how much? Uh, $18,450. Okay. Then we have non-current assets. Non non-current assets, and these are 27,500. 27,500. Okay. Then we have trade receivables. Trade receivables. How much? 7,230. 7,000. 7,230. Okay. Uh, okay. Now, if we add these three assets, we'll get total over here. Total of all these three assets. Okay. Get the totals over here. Okay. Part by drawing. Okay. Now see the total of total assets. Uh, total assets. How much? 18,450 plus 27,500 plus 7,230. 53,180. 50 53,180 total assets. Okay, now less liabilities. So what are the liabilities available? Now we have bank overdraft. Oh, bank overdraft, bank loan, and trade payables. Okay. Bank overdraft, bank loan, and the third one it was trade payables. Okay. What was the amount of bank overdraft? 3,470. In the bracket, 3,470. Why I'm writing in bracket? Because I don't want you to add this mistakenly. Okay. Now, bank loan. Okay. How much is the amount of bank loan? Uh, 8,500. Again in the bracket, 8,500. Okay. Then next, in the bracket, trade payable. How much is the amount of trade payable? Oh, 9940. Okay. Yeah. 9940. Okay. Oh, okay. Now total. Oh. Okay. Now get the totals. Capital at end. Assets, total assets minus total liabilities will give you capital at end. Okay. So here we'll write capital at end. Capital at end. How much? Mine 53,180 total assets minus 3,470 minus 8,500 minus 9,940. Total capital at end 31,270. 31,270. Okay. Now we can easily calculate capital at end. Acha, okay. What we have to do here? We have to add drawings. Okay. What is the amount of drawings here? 14,870. Okay. So 14,870 is the drawings. Okay. Then less additional investment, and that was 9,000. A vehicle was introduced by the owner during the year, and less capital at start. So what was the amount of capital start? That was 41,000. Okay. Oh, the items of less must be written in bracket, so we don't get it added. Okay, that was 41,000. So what we get in the end? Yes. See, 31,270 plus 14,870, 46,140 minus 9,000, 31,270 plus 14,870, 46,140 minus 9,000 additional investment minus 41,000 capital start. So 3,860 net loss. Okay. So sorry, yaar, my drawing is not that good. Even that I'm trying. Okay, my level best. So here loss in the bracket. 3,860. 3,860. Got it? This is the loss. And we have gained 7 marks here. Getting my. Okay. Now, next question. Okay. During 2022, Khalid kept more detailed records but could not provide a figure for revenue. The following information is available at 31 December 2022. Inventory, closing inventory is given. Opening inventory will take from here. The closing inventory of 2021, that was how much? Here, this one, this one, 18,450 will become the beginning inventory in the preceding year. So we'll write it over here, text. Okay. Opening inventory. Oh, it's on inventory. Inventory. क्या हो गया इसको? ओके, तो क्या हो गया? ओके, ओपनिंग इन्वेंट्री डॉलर 18,450. 18,450. Okay, what we have to add? Purchases. Okay, the amount of purchases. The amount of purchases 1,48,300. 1,48,300. Okay, and we'll less closing inventory. Okay, closing inventory. Yes, it should be in bracket 16,250. And we'll get here cost of sales, COS, cost of sales. That would be how much? 18,450 plus 148,300 minus 16,250. That is 150,500. 150,500 dollars. Okay, this is the cost of sales. Now, how to calculate? Um, you know. Okay. Now, what we have to do? We have to calculate revenue. So, how to calculate revenue? Revenue is equal to cost of sales 1,50,500 multiplied by 150%, because the markup is 50%. So 150,005 multiplied by 150%. So total sales revenue would be dollar 225,750. 750. Okay, so if we add markup in the cost, so cost will become 100, revenue will become 150% by adding 50% markup. So what we do, we multiply cost by 150%, we get the revenue 225,750. Okay. What are the two advantages of maintaining a full set of accounting records? First and most important thing is accuracy. And the second advantage is uh, helps in decision making. Okay. Complete and accurate. Okay. Disadvantages, time consuming and cost consuming. Okay. Now come to question number 4. Okay. If we come to question number 4, what we have, what is cost center? Cost center is that uh, is the unit of a factory which is involved in production where cost is incurred. Okay. Now, allocation of overhead means when a cost is attributed directly to a cost center is called allocation of overheads. When we cannot trace the cost, we cannot allocate the cost because we cannot trace the cost. So what we do, we apportion the cost between different cost centers, which is called apportionment of cost. Okay. Okay. Now, following information is given: factory overhead, uh, cutting department 273,800, finishing 189,240, and service department 31,350. It means definitely they will ask you to apportion the service department cost into other two departments. Yes, here it is. So, no, what is the basis of reapportionment of this service cost to these two cost centers? Number of employees. So, total number of employees, how to do working for that? Okay. See, total employees uh, is equal to 125 plus 84 is equal to 209. Okay. Now, uh, so cutting department, I'm writing CD, cutting department. That would be 31,350 cost multiply by 120, sorry, 125 divided by 209. So that would the service cost reapportioned to cutting department would be 125 divided by 209 multiply by 31,350. That is 18,750. $18,750. Okay. Now what about finishing department FD? I don't need to bother, but even then I'm going to write it. You don't need to bother about it. What you have to do, multiply by 84 divided by 209. But you can do it directly. How? 31,350 minus 18,750. So that is 12,600. 12,600. Got it? This is how we have to divide uh, reapportion the cost of service center into two departments. Okay. So here we'll write 12,600 and here we'll write 18,750. 18,750. So altogether this cost is finished. 31,350. Okay. So if we add here, we will write the total 273 273,820 plus 18,750. That would make 292,570. 292,570 total cost of cutting department. And okay, what would the cost? 189,240 plus 12,600, 201,840. 201,840. Okay. And here we'll write 0. And in accounting, whenever you write 0, write this like this, dash 0 dash. Okay. Now, this is complete. Okay. Okay. Now, calculate an appropriate overhead absorption rate. connect to two decimal for each production part. I think in cutting department, machine hours are greater than direct labor hours, so we use machine hours as the basis of appropriation and absorption rate. And here, direct labor, in finishing department, direct labor hours. So what we will do, we'll write it over here. Oh, okay. 'I don't know what's going wrong with me. Okay. Okay. 292. 292. 570. Okay. Divided by 17,900. 17,900. So you will get how much? 292. 570 divided 292,570 divided by 17,900. So the rate 16.34 for $16.34. Dollar 16.34. Okay. 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 Now come to uh oh my god, what's wrong? Uh, oh, what's next? अबे कहाँ चला जाता है भाई, इसको जरा सा क्लिक करो. हाँ ये. Okay. So, sorry, I forgot what was the price actually. What was the cost? 201840. 201840 divided by. Now here we'll calculate using direct labor hours. So that was greater in during 7420. 7420. Okay. 201840 divided by 7420. 27.20 dollars. $27.20. Got it? Okay. Now come to the next part. Now we have to calculate over absorbed and under absorbed. Acha. What we are going to do? Uh-huh. Oh my God. Oh, Where we are. Something is wrong. Something is wrong. Okay. Oh, what's wrong? I don't know. What's going wrong? I don't know. Okay. Something's wrong. I don't know. Things are getting worse today. Okay, come on. Okay. Now, actual results for the year ended 31st August. uh, okay. I don't know what's wrong. What is going wrong? I can't understand. Things are getting worse. Okay. Okay. I don't know what are the things getting worse. Why things are getting worse today. Actually, I don't know. Right from very beginning today, from early morning, my network is not working. I don't know what's. There must be some political reasons behind that. Okay. Uh, what's wrong with that? I can't understand. Something is wrong. Okay. 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 So things are getting worse today. Okay. Okay. Oh my God. Okay. Oh my God. Oh my God. Okay. Where we are, 4D. Acha, okay. Now, I don't know what's wrong today. Things are getting worse today. अच्छा जनाब. Okay, cutting department dollar 312,600 minus, okay, minus, uh, this is actual for factory overhead, minus the absorb overhead. Absorb overhead is 17,200. I think I should keep it in bracket. 17,200 multiply by 16 point, how much that was we calculated? 16.34. 16.34. So the answer would be 312,600. No, sorry. This one, 17,200 multiplied by 16.34, 281048. 281048. So 312,600 minus 281048 is equal to, it means we have under absorbed 31,000 minus 312,600, 31,552. 31,552 under absorbed. Okay, under absorbed. Okay. Okay. Now finishing department. Dollar 193,400 minus labor hours 7,210. Okay, in the bracket 7,210 multiply by the rate was how much was the rate there? 27.20. 27.20. Okay, so 193,400 minus 7210 multiplied by 27.2, 196,112. 196,112. So the answer would be over absorbed. Okay. 19. The answer is coming in negative. So it means how much? 193,400 minus 196,112. 2712. 2712. Okay, over absorbed. Okay. Okay. Now move to the next question. Oh, a single product X is manufactured. However, demand for this product has fallen recently due to increased competition. The following information is available for product X. Uh, Direct material, direct labor contribution is given. Okay. Normal capacity is 14,000 units per month. Factory is currently operating 75% of normal capacity. All the units produced are sold. Fixed cost per month is 56,000. So first what we have to do, we have to calculate total contribution. Contribution is equal to $20 multiply by 75%, 14,000 capacity is 75% of 14,000. So that is 10,500. 10,500 500 units. So that would be multiply by $20, $210 total contribution minus fixed cost 56,000. So total profit um, to its profit would be 210,000 minus 56,000. 154,000 would be our total profit. Yes, $154,000. Done. Okay, move. The directors are considering two options to increase profit. Reduce the selling price per unit by 5%, run a 6-month advertising campaign at a cost of 1100 per month. Monthly sales are forecast to increase by 25% on current levels. Okay. Okay. Calculate the profit to be made in each option. Okay. So if it means what we have to do here, first we have to calculate the selling price. The selling price must be, if we add direct material, direct labor and contribution, 22 plus 18 plus 20. The selling price is 60 over here. Okay. So the new selling price would be decreased by 5%. So selling price, selling price uh, per unit would be dollar 60 multiplied by 95%. So that would be how much? Multiply by 95%. So that means we dollar 57 is your total new selling price. Uh, okay, if we choose option A. Okay, now monthly sales forecast to increase by 25% on current levels. Okay, now, so what we have to do here, I think they are not going to change direct material cost. So direct materials would be same. Uh, how much was direct material? Uh, dollar 22, direct labor 18. Okay. Dollar 22, direct labor dollar 18. That means our contribution, new contribution contribution would be 57 minus 22 minus 18. Minus 22 minus 18. New contribution would be dollar 17. Okay. So if we are working on 25% more capacity, so what would be total contribution? Total contribution is equal to 10,500, the present capacity, multiply by 125%. That means it would be 10,500 multiply by 125%, 13,125 units, multiply by $17 contribution. So that means total contribution would be multiply by 17, 223,125, $223, 223,125. Okay. Now, what we have to deduct here? We have to deduct here um, fixed cost, because I think they are not changing. The fixed cost is same. Okay. Fixed cost is same. So 56,006 and marketing cost of 1100. So that means the profit would be how much? 223, 125 minus 56,000 minus 1100 advertising. So that is 166025. Uh, okay, one dollar, sorry, dollar 166025. Okay, this is option A. It means if we adopt option A, the total total profit from total contribution would increase as compared to the current situation if we are adopting option A. Okay, currently we are having a profit of, we have just calculated how much was the profit? 154. Now, if we adopt option A, our profit will increase to 166,025. Now, what about option B? Okay, for option B, we have to do a certain workings because there are so many things we have to be consider about option 2. Okay, see, first thing, discontinue manufactured product. Okay, now produce product Y, selling price $58. Okay, that factory can operate 110% normal capacity. So it means normal capacity is 14,000 multiplied by 110%, 15,400 units. So, and selling price is 58. So what we have to do here, we have to calculate revenue. That is total units, 15,400 units, 15,400 units multiply by $58, the selling price. So it means total revenue multiply by 58, 893,200 dollar, 893,200. Done. Now come to direct materials. Direct materials. Okay, let's see what is happening in direct materials. Okay. See, direct material cost will increase by 10% per unit. Okay. Direct material was 22. So direct materials would be for 15,400 units multiply by, that was previously 22. 22 multiplied by 110%, that means $24.2. $24.2. And this will make direct material cost how much? Multiply by 15,400, 372,680. 372,680. Okay. Now come to direct labor. Okay. Now, what is getting wrong with direct labor? What is changing in direct labor? Direct labor cost will remain unchanged. However, workers will pay an overtime premium of 50% for all workers over normal capacity. Okay. So in that case, uh, okay, we have to calculate direct materials twice, direct labor twice. Okay, first normal rate $18 for 14,000. 14,000 units multiply by $18. Okay. 15,000 multiplied by 18. That would make 252,000. 252,000. Okay. And again, For extra capacity, 1400 units, they will be paid 50% above. So $18 multiplied by 150%, that is 27. So direct labor, we have two components for direct labor, overtime, and this is direct labor, normal time and overtime. 27 multiplied by 1400, that would make 37,800. 37,800. Done? So here we have a contribution now. Contribution. Contributions, how much? 893,200 minus direct material and direct labor, and we will come to 230,720. Done. Now we have to come to fixed cost. Okay. Now fixed cost. If we come to fixed cost, we have to be careful. Machinery need depreciation. Machinery will need some alteration, which will cost $54,000. So we have to add 50 depreciation for this 54,000 capital expenditure, 25% divided by 12. So per month is 1125. Okay, 56,000 is the normal fixed cost, plus 1125 for depreciation. Okay. Now, company need to borrow 30,000 finance to finance the cost of the machinery alteration. Interest at 6% will be charged on this loan. So 30,000 multiplied by 6%. Annual interest is 1800 divided by 120. So that, uh, sorry, 30,000 multiplied by 6%. Annual interest 1800 divided by 12. Answer 150 per month. So what we have to do, yeah, the fixed cost will be 56,000 normal plus 150 for interest plus depreciation. How much was the amount of depreciation? I forgot. Uh, uh, 54,000. Okay. 54,000 multiplied by 25% divided by 12. So 1125 plus 11125. So the answer would be fixed cost. Okay. 56,000 plus 1125 plus 150. That would make 57,275. 57,275. Okay. So profit would be 230,720 minus 57,275, 173,445. Oh my God. 173,445. 173,445. Now see, students, we are earning profit at current situation, 75,000, 75% capacity of 40,000. If we are going to use option 1, again we'll earn a profit of 166,250. And if we go for option 2, option B, we'll earn more, 173,445. These are the facts and figures. Now come to the other factors. See, what are the financial factors? Yes, if we choose option A, we are earning profit more than the current capacity. If we adopt option B, again we will earn more than option A and more than current position. Getting my point clear? Now, uh, but suppose if we go for option A, we have to incur advertising cost, which is also reducing our profits. Okay. And now, and if we go for option B, again we have depreciation and interest rates to decrease our profits. Okay. Non-financial factor. The most important thing, I think, if we, because we are product X is, earning profit, And if we close down product X and if we introduce product Y, a new product, will this product be successful in the market? Will it be able to replace product X? Will Y be acceptable to the people who are using X? Sometimes what happens in marketing, what I've studied when I was doing my master's in university, what I've studied that certain times when you increase the profit of your product and you think your product is in a stable condition in marketing and earning profit, what you need is to modify your product. So if we modify X, if Y is a modification of X, that could be a chance. There could be there is a chance that product Y will be successful. Or if uh, the thing is they are not considering using both the options. Okay, why not coming with X and Y both? This factor is also ignored in this question. And again, uh, the thing is advertising, marketing, packing. There are so many things we can use to increase the profitability of our existing product. And if Y is not the modification of X and but it is a minor innovation, then we have to be very much careful that it might not be that much successful which X is right now. So it's up to you what decision you take, what things you consider in this situation. It's up to you. Okay. So that's all for today. Inshallah, we'll be coming next week with A2 paper of June 2023. Inshallah. Take care. Allah Hafiz.